Good morning. In our last lesson, we talked about growth and we calculated a growth rate. Today, we're going to focus on value and we're going to calculate earnings per share and price to earnings ratios. And we'll talk about what those mean. Let's look at an example here. I pulled up Amazon on a financial news website. And on the front page here, you can see they have the PE ratio and the earnings per share. Both of these have TTM in parentheses. That means trailing 12 months. That means the most recent 4 quarterly reports that the company put out added together. So let's talk a little bit about what these numbers mean by going into the company's actual financial statements. If you look at the income statement, you start with, at the top is all the sales that the company had over that period. We'll stay in this column here that says trailing 12 months so that it matches what we just saw on the front page. And sales is just how much money worth of products and services were sold over that period of time. Then we take away all kinds of expenses, the cost of sales, operating expenses, and all that, and we get down to our net income, which is our profit. The profit is what the company has the option to reinvest in growing the company or return to shareholders through dividends or share buybacks. Amazon usually puts most of their profits back into growing the company rather than returning them to shareholders. So when we talk about Amazon's earnings, we're not talking about something that the shareholders keep and put in their pocket and walk away with. We're talking about something that gets reinvested in growing the company. But with some companies, it might be paid in dividends and stuff like that. So let's put this number in here. This is our net income. And it's these numbers on this sheet are all in thousands. So this is 13 billion. And I'm going to go in millions here to make this easier. So I'm going to say 13,180 million. Then we're going to look at how many shares of stock Amazon has. There are 500.89 shares outstanding of Amazon stock. So 500.89. Then, so earnings per share should be this number divided by this number. Then we'll look at the PE ratio. Currently, Amazon's stock price is $3,305. And the PE ratio, price to earnings ratio, is the price divided by the earnings. Amazon is currently $3,300 per share is the stock price. And if you divide that by Amazon's profits, you get 125. So if Amazon's earnings don't grow, it would take 125 years to make back the amount of money you paid for the stock. It's trading at 125 times its profits. What this is telling us is that investors expect an extreme amount of growth from Amazon's earnings in order to justify this price. So they're willing to pay a really high price for the current profits that Amazon's making because they expect an extreme amount of growth. So somebody who's a value investor probably wouldn't like to see this number be this high because it's assuming a huge amount of growth that may or may not happen. So they might look for another company to invest in where they can get the same amount of earnings at a much cheaper price. So let's sum up. Earnings per share is the company's net income divided by the number of shares outstanding. The price to earnings ratio, or PE ratio, is the current stock price divided by that earnings per share number. And that number tells us at the current rate of earnings how long it would take for the investor to break even on their return on investment. I'll have an assignment on Google Classroom for you to apply what we learned today. Have a great day.